Hey, good afternoon, guys. I'm gonna hit on macro. I'll actually do crypto first, and then I'll hit on macro. Pretty good move in bonds today. Some interesting stuff going on in equities and the dollar as well. So yeah, let's just get right into it. I was working on some cycle counts with Ethereum last week. We kind of talked about June, July is still a major 8.6 count on the sine wave over the longer term, weekly, monthly, yearly. So we're coming up on that. This 8.6 count has done a pretty good job um, the last several years. So we cycled into the highs. Let me just try to mark on this real quick. Cycled into the highs here to all-time highs. 2 8 cycle count drops. This was a pretty good low into the bands. And then you had another 8-point count, basically double, triple bottoming. And then we've just been in this cycle. You had a 4-week count up, lower high, 8 count, 2 8 counts into the low. And then we've retested that. This is actually pi on some longer term charts as well. But there's a pretty good ebb and flow here, cyclically up, back down, double, triple bottom here with another 8 count. And so we came in kind of the middle of May with a 9 count. And this week marks 7. What's interesting about that is we're getting closer to what I was mentioning, these longer waves. May 23rd, starting to see a cycle turn here in June, the beginning part of June. ETH's a little bit different than BTC. I'll get to that in a second. And then here we are, the July turn. So I actually we bought back Ethereum after selling it over the weekend. So I'm playing Ethereum long and BTC short, and that's short crypto overall. I've been writing about that. And the cycle that's here, we're talking about June 25th. Then there's another wave that's a little bit longer out following in July. So this is going to be pretty key for whether the market's going to make higher lows. If we look at the more near term, so again, Ethereum, I think, offers a little bit more movement on the long side. And then we've been kind of building into a few alt positions. So I think it's easier just to short with the overall market being Bitcoin and play it that way, and then pick your spots on ETH or the other alts that you like. So that's how I've been doing it. This downtrend here was in place. There was a 1700 and 1900 channel I was talking about last week, and we kind of tested that over the weekend. So if you bought anything again around 1800 or lower, you take some off above 1900. That's just been kind of the range. Draw it out. So it's just nothing fancy, but this is kind of the way we see it. When you lay over the regressions, it's the same thing. So today, after failing up at the hourly pi, or it was 4 hour. Now we came back down and basically held pi on the 30 minutes. So if you took some off up here, you get a chance to buy some back. When you look at BTC market, what I wanted to highlight, this was what I was trying to get to. 4-hour pi is where we talked about as the top of this range. So if you want to throw a regression on there, it's done a pretty good job. So we were playing some shorts and some hedges, some sell signals in here around pi, around the bands. And then the wider stuff is, again, your 25,000, 28,000. This was, I'm not surprised you struggled there at all. So if you get back up to those levels, I like resetting shorts. I like resetting hedges. and really just going to play these two ranges largely: BTC short, ETH long. As far as alts, Binance is back here towards Pi. I think you could start playing that one longer term. It's held up probably better than most of the major coins, and it's worked its way into the top 10 for a while. So we have some cyclical turning points here that we're coming into pretty much this week. Exactly. So I like that one on the long side. Polkadot has been interesting when you get oversold in ETH and BTC. There's a pretty good range developing here. We'll keep an eye on that one. Solana had as a cycle turning point this week also. So this one, we saw a high, another high. This was pretty much marked below. So that one is interesting. Again, I would play that one on the long side. I mean, you don't want to chase it up here, 24, 25. You kind of missed it, but you get below 20 and then in the teens, it makes sense. Monero, I was looking at this a little longer term. I haven't done much on that yet. But again, you're back at Pi. The cycles are low in the weekly. And once this gets outside of its wedge, that's going to be another favorite to play on the long side. If we go to global macro, let's see. I wanted to highlight some of the things we're doing in the Cycle Edge Pro. So if you go to services, guys, there's cycleedgecapital.com. I've just kind of been putting this back out. Wanted to get some content going lately. Today we had some nice failures at Pi. I was kind of highlight that for some of the institutional clients. So we've had a bunch of updates. I think 10 of the last 12 we've had as winners. What I was sending out, I mean, this is NASDAQ, FX, Euro's been down, covered that, covered pound, covered some Russell, gold's finally popping back up, some silver last week. We got long some oil this morning after selling well into 73.74. And a good trade in bonds. So last week we were covering 2s and 30s. And let me just switch over to what I wanted to do on that. Today's update I'm just about to send out. We're covering 2s short as the curve was flattening last week, and then you got a chance to cover 30-year short, and then we were working into longs. Working into longs and 10s, where we're working into ultra position longs, and that was been a scale over like 2 or 3 lots with essentially having a lot of room to buy more at 132. And I talked about not being able to get there, and then here we have the bounce this morning in both 10s and ultras, and we were able to take some profit on that. So in this note I'm putting out right now, this is going to highlight the same stuff. I'm talking about basically what I just went over in Bitcoin and Ethereum. Pi up at 4 hour on BTC. I just went over that. More about Ethereum, and then this is what the bond trade I was speaking of. So we've been playing this on the short side. This is long bonds covered well into 4%, which we were all over. That was a good trade, and that helped us build into our 10-year position. This is us being short 2s covering. And then here's the ultra position I was mentioning. So 1, 2, 3 buys, 132 handle. I was thinking would be nice to maybe double the position, and I actually thought we probably wouldn't see it because 4% on bonds was getting sticky. I wrote about that, and then here's today's move back up. So 133 traded as high as 137. The futures did roll, but there's still 3 points that we took out of that trade. And 10, same thing. This is the futures rolling, but that was a good call. So still like being long treasuries overall. I think there's more to come in this rally. We'll be playing both sides and kind of navigating that as we go. And just about my head on. The euro, the dollar, get the dollar right, get a lot of other markets right. Everybody wanted to short the dollar back here. Um, geez, just the start of the month, and now we've just completely broken down. So dollar rally continues. We're oversold this morning. I wish I would have been short more euro. We talked about covering down here. I covered my pound. I only have a little bit of euro short on, and that's fine because I'm happy with gold rallying. So if the dollar comes off here from guys being oversold, as far as euro being oversold, dollar being overbought, dollar back down, gold should trade better. I'm a little bit out of the money on gold. Our average is right around 2000, but we held where we wanted. I said this 1950 area was big. It's the bands. See if we make a higher low, which we did. So we'll take some profit as we move back up. I think we got a good shot at retesting the highs. And if we get up there, depending on what's happening with stocks, you got a shot at new highs. Played some silver short against that. I made an update earlier. So we've been playing short silver, long gold. That helps when the deeper pullbacks in gold. You don't need to be in a rush to re-short silver, just because I think we just put in this higher low, so we got to move some space and time to move back up on the cycle. Covered treasuries, FX. That's probably all I wanted to hit on. I guess lastly, oil. Oil is bearish in quad 4, which is growth slowing and inflation decelerating or disinflation, and that's the growth cycle, the regime that the market's in right now. So oil actually struggles with that. You get dollar up, bond yields down, and oil you usually want to be short. The only thing I have with that trade is what's going on with the war cycle, the geopolitics. You've always got OPEC playing games, and any type of blinking from the Fed or Fed dovishness or this reflation trade. Being short equities, you win on that. If you get growth slowing, but if you get a reflation trade, the Fed gets easier, stocks take off, you should have oil bounce. So oil is kind of like a little bit of a risk on that. I've actually been going the other way. When you look at the weekly cycle, sorry, I think it's, yeah, the weekly. Being long down here in front of pi it's been pretty good. So even though this trend's down, I get why being energy bear, oil bearish, I get that with the global macro. I just think it's an easier way to play if you're long dollar, if you're long treasuries, if you're short equities, any reflation type of trade. Energy is good to have on the long side. And then you have those other tailwinds I just mentioned as far as catalysts to kind of push it higher also. So we sold really well into 73, 74 after buying down here again towards pi. And now is the first time you can go back in, I think, long the market. So we signaled and did that today. And there's a couple other trades we've been doing, like short copper. That's been good. There's some other things in some individual stocks and ETFs, but I think that's probably good for now. So, lastly, just some, as far as if you guys are new to what we do, there's 3 trading services: institutional product, Cycle Edge Pro, independent traders who are kind of doing this full time. Even if you're new or you're not doing it full time, I mean, there's tons of highly actionable setups, what we're doing position wise, analysis. And I'm just putting that out there via Substack, which makes it easy for me to communicate via the email. And if you're on your mobile, it's easy for me to publish. But then also, I put together a Slack channel over the weekend. So I'll have info on that on this post. And then you have the crypto product. With Cycle Edge Pro, guys, I guess one of what I highlighted the most, it's if you click on that link there, it'll shoot you over to the pricing page. So it's $100 a month. If you sign up for the annual, you save 50%. Kind of a no-brainer with what we've been doing lately. Just a few trades on any of the calls that we've had. There's plenty of opportunity to make some money. So that's that product I kind of wanted to highlight. Institutional product is geared towards professional traders or set up a few desks also. But the info about that is there. And if you scroll down the inner circle, this is for some of my guys that were involved before. We're getting set back up. And then if you click here, anybody that's new, or if you've ever showed any interest in the coaching or the mentorship that we did, I'm putting it all together. The info about that, you can watch some of these videos, but it's all the courses and things we used to sell on the educational side. This is slow to load. There's a video about it. All the courses, the options of Forex, the Pi Cycle model. You're going to get both the crypto and the Cycle Edge Pro service in addition to that. And then the coaching, which is trading together in a group setting Tuesdays and Thursday mornings. And then the mentoring, I'm going to do that one-on-one. So it's a little bit easier to see. Every trader is different. Some of you are further along in their journey. Some of you are trading different markets. But there's all kinds of stuff to work on there. That's where you can make some of the most progress, because there's accountability in there and helping you stick with what you're slipping up on. If you're trading a particular market, kind of being aware of where the big turning points are, the major edges we can help with, whether you're hedging or you're trading even retirement accounts to, some sort of prop book. So all of that, $14,000 in courses, coaching and mentorship. Plus I threw in these bonuses. So I have a link for Top Step. It's a great way for you guys to trade futures. Whether you want to swing trade or day trade, I can get you 20% off with my links. There's info on that. Hedgeye, they're probably the best as far as Wall Street. I wouldn't call them old Wall Street, but as far as getting the turns right, as far as doing the fundamental research on the macro, the economies, the GDP, to getting inflation, the big picture turns right. So that's important. And this is probably this is a bundle of just their best products for you guys. I watched this macro show I have since Keith started it. So there's some info on that. Plus their risk ranges is helpful. I mean, our timing is better, more frequent, more actionable. His stuff is kind of wide, but it's still great to have a kind of a backdrop. So I threw that in there. I think that's important. And then I just thought I'd do a fun tech tool. If you guys want a Cycle Edge new iPad Pro, I'm throwing that in as part of this package as a bonus. So also with the futures, you can get up to 150,000 in capital, 15 contracts. So I think some of you know about that. You may not, but all those three bonuses, usually the price of between the coaching and mentorship and all the courses is up around $7,000. So if you guys want to join and get started for June, I can run this through Monday at half the price. So $3,500. And then we can get started and see who's interested, who wants to play for June coming into the summer, whether it's getting the crypto right on the cycles. And then also, I didn't really talk about the big picture in equities, but this is pretty much the third phase of the bear market. And it's very similar to 2000, 2008. I traded the 2008 bear market. There's always the bear market rally that's met with the Fed getting easier, the latter part of the credit cycle. And so there's still a lot of hot air underneath this market. And the credit cycle needs to play out. The unemployment cycle needs to play out. So there's another phase of this bear market that I don't want you guys to miss. So we'll take advantage of it together. I'll send this out and then talk to some of you in the morning. The rest of the week will be pretty important. So if you want to jump on this, sooner the better. We've got manufacturing tomorrow, jobless claims, and coming into Friday's job report. All right, talk to you guys soon.